good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, we're holding on to the green and holding on to green in style. 25,100 has been scaled comfortably by the index today, and we continue to hold on to those gains. In fact, 25,150 thereabouts is where we are at right now. Sharp rebound as far as the mid-cap index is concerned, and we should pull up the mid-cap index because that will tell you from the intraday lows we have managed to recover quite smartly as far as the Nifty mid-cap index goes. So a lot of names in the broader markets actually holding up in the green. In terms of the sectors and spaces which are doing well, Realty deserves mention, all thanks to Wipro Realty as well as Raymond, which has actually managed to see quite a bit of surge in the trading session. So both of those stocks up in the green. There's also quite a bit of momentum when it comes to the banking stocks. Case in point being HDFC Bank. That one is holding on to gains of over 2%, and that is one of the big contributors to the index today. Federal Bank as well as IndusInd Bank are the other top gainers as far as the banking names go. On the gaining side, a lot of these financial market ancillaries are doing well. Take a look at BSE, solid surge there. Call it the impact that NSE has chosen the kind of contracts it has for the weekly expiry. CDSL, since that NSDL listing is anticipated, has been doing quite well. And Angel One, ahead of its earnings, is also fairly excited. On the losing side, however, some of those big gainers of Friday are getting undone. So Bandhan Bank, remember, was up 10-12%. It's getting undone today. Similarly, Tata Chemicals, post that appointment of Noel Tata, was running away in the trading session. It's got reversed a bit today. And then IGL is the other one from the city gas distribution space, which is under pressure. But more or less, there's more green on the screen than red, and holding on to 25,100.
Well, yeah, we're holding on to 25,100. In the meantime, just take a look at some of the other stock movers, and couldn't take your eyes off from Avenue Supermart or D-Mart after its earnings over the weekend, and the kind of slip that they've seen. Look at the kind of brokerage downgrades that have trickled in, and more importantly, they've just sliced their price targets. Case in point being a JP Morgan target cut to now 4,700, and Morgan Stanley from an overweight, it's a serious jump up all the way down to underweight, and the target price has been slashed all the way to 3,700 thereabouts. So that's that on Avenue Supermart. The stock hasn't resurrected at all from its gap down lows. In the meantime, there's Wipro, of course, which has been holding out very well while we are counting down to HCL Technologies numbers, which also, by the way, is holding out. Wipro has climbed up a good 4% in trade. The board is going to be meeting to consider a bonus issue on the sidelines of their earnings. That stock holding out quite well. And of course, there's Ashoka Buildcon as well. They've got a bunch of LOAs for 3 projects worth about 2,300 crore rupees. So that's keeping the stock pretty warm as well in trade. Other than that, like Anisha flagged off, it's really realty and technology. Those are the 2 sectors which are holding up right now in trade. And HDFC Bank and L&T as well are providing the index the due cushion. But what's lined up ahead for the rest of the week, given that a mighty over 22% of the Nifty weightage is going to come out with its earnings, starting off from HCL Technologies and Reliance today post-market hours. Let's take it across to Pashupati Advani, Naresh Mirani, as well as Kunal Bothra, and find out what they're making of the market so far. Kunal, a nice climb up, 170 points higher. The futures now sitting at 25,200 plus. Do you think this is going to hold?
I think it's been a good recovery for the index, and what distinguishes today's move over the last 3-4 days, of rally or a pickup of price action for the indices is the support coming across from large cap names, and the 3 key sectors, financials, which have started to look very attractive. Many of the stocks are seeing a follow through up move. Large cap names in that balance. The second and the most important is the real estate index that indicates the high beta nature of the markets, the risk and appetite of the markets making a comeback, and then the IT stocks, which are also making a very strong comeback, especially after last week's mild disappointment which came by in the second half. Post the TCS result, we saw many of these IT stocks going into a mild bit of profit booking or a sideways price action. These stocks are now trying to make a comeback. So I think on the back of this, 3 key sectors which have started to look attractive, I would probably believe that the trends, at least on the stock specific front, looks positive. Now, the 2 levels to watch out for in terms of the index on the Nifty specifically, 25,250 on the spot levels is something which I would be watching out for. That could be a first litmus test of a breakout of sorts for the Nifty. And for the Bank Nifty, 52,000 on the Bank Nifty on the spot levels is a very important resistance. So if we manage to scale past another 150 points, then I think we could probably be looking at a breakout as well as a start of momentum for the index.
Okay, point taken. So that's the view coming in at the index level. But Nuresh, what's the view on HDFC Bank? Doing quite well for itself. And the other one that we're watching out for is, of course, BSC. That too is having a great run. In fact, if you look at the last 1 week move, and that should come up for you on the screen, my guess is that stock must be up at least in double digits, if not more. So 22% in last 7 days itself. What's the view here, Nuresh? One should book out the profits on BSC or hold on?
So, starting with BSE, the stock has done really well, and it's gone much more than anyone would have expected in the last 2 months. The stock, after all the announcements around it. So, time to book some profits off currently, because it's gone from 3,000 in September all the way now to getting closer to 5,000 rupees. So, that's a price point. We'll also see some sort of a pause. Then going to HDFC Bank, that looks promising, because finally the stock has shown some relative strength in the last 2 sessions. So the stock was the first one to correct sharply from 1780 all the way down to closer to 1600, 1620 band, and which is the support band it had for the last 3 months, July, August. It did not close below 1580 and has now made a pullback. And now we go towards 1750 as a target in the short term.
Okay, point taken. That's the view coming in on BSE. Yes, definitely run ahead of everyone's expectation. But Pashupati, what's your take up? This, of course, financialization theme is not a short-term theme. It's not a matter of a few months or even a few years at that. Definitely a long-term theme for India. With respect to that and the fact that the NSE IPO is expected to be around the corner, which are the names from the financial ancillary setup that you would recommend?
Well, obviously, because the NSE IPO is coming, then CDSL and BSE obviously would be participating, because I think that the BSE, the NSE IPO is coming from currently at a higher P than the BSE one. So people would obviously look at BSE as a cheaper alternative and go for sort of convergence to mean. The other thing is that generally the bank index is doing well. It's being pulled up by HDFC Bank, which is a very large part of it. And again, I'm not so wild about HDFC Bank, simply because I think the merger is going to take time. But overall, it's a good long-term buy. And if you're a fresh FII looking at India, definitely HDFC Bank has to be a big part of your portfolio, and therefore it is. So I think that that's what's bringing it in, as opposed to I like HDFC Bank because it's going to outperform the others. I don't think that's the case.
Okay, that's the word coming in right now on where HDFC Bank is headed. But Pashupati, what is it that you made of the the commentary coming in from Avenue Supermarts? QCOM clearly hitting them hard, and then of course other organized retail plays as well, quite a threat. Minuscule as it may be in the revenue share right now, but a Zudio, for instance, as well, is sort of eating into the territory that an Avenue Supermarts in. And of course, needless to say, the company also coming out in the open and saying QCOM clearly has eaten up into their market share and led to that margin slip, at least when it comes to the urban large metros.
Well, the thing about Avenue is that they are making a large amount of their net profit from non-food items, in the sense of, they're making money on garments and, underwears and socks and all the other things, kind of like Costco and Walmart are in the US. So they're becoming more like that. But it does take time to move from one, when they've been only in food, to go across all segments. And I think that that's happening. Now, during the transition, obviously things are all over the place, and that's obviously putting some pressure on the margins. But I think that long-term Avenue is a good place, and it's a good company, certainly well-run company. And the promoter and the CEO have done very well and have made fantastic things that are making it happen. It's unfortunate that the temporary blips have meant that the brokerage houses have lowered their weights, but I think that's just a matter of time.
Right. In fact, we chatted with Venugopal Gare from Bernstein as well just today morning, and he also shared with us his thoughts on what he thinks about DMart going forward and the kind of challenge that they're going to have from the entire quick commerce space.
Given where we see Avenue Supermarts opening today in terms of stock price, see, if you were to, I actually find it a bit difficult to believe at an India-wide scale you're going to see an impact on kiranas in general, at least in the next couple of years. We're positive in quick commerce. I'm still saying that. It's hard to believe it will be $50 billion in 3 years, right? So it's not going to be that disruptive for the overall ecosystem to be impactful enough, because I think convenience TAM itself is relatively restricted. Some of the quick commerce names, both upcoming as well as the ones which exist, we have overweight stance on them. Now, interestingly, I do like organized retail as well. So I think this is from a pivot point of view, it's a very unique situation where we are positive on both at this juncture, right? And I think it's going to play out over time in a fairly different way, but we're currently overweight both. Quick commerce is preferred over organized retail, and both are preferred over traditional retail.
Back with closing trades right here on ET now. Let's just take stock of what the closing trades are up to. Holding so far so good, and we're maintaining in the green 25,200 for the Nifty futures, almost a 200-point scale up. Though it's important to keep a close eye on what's happening with the rest of the globe as well. Flat for the FTSE as of now, CAC mildly soft, DAX holding up marginally, FTSE MIB and Stock 600 as well, barely holding on to the green. Asia, of course, was a much more dramatic and interesting picture, where Hong Kong slipped by about almost 150 points. Shanghai was up a staggering 2%. Japan holding up about almost 0.5% as investors digested the stimulus plan by China. It managed to do quite okay. But Pashupati, I just wanted to understand whether you think a large chunk of the weakness in the market is over, or do you think it's literally now played as the day kind of a move that one can expect?
No, I'm in two minds about this, because on the one hand, the Middle East problem is not really sorted out yet, and they keep, waving hands and saying that this, there's Iran with its nuclear threat. They're talking about gas. They're talking about all sorts of crazy things that could happen in the Middle East. So that's one sword that we have over us. The second is, as you just mentioned about China, Shanghai market is pulling everybody up. So there is some money going in. Though I'm seeing a lot of smart money saying, fine, it's just a flash in the pan, so let's not jump in, because they still don't trust China properly. But, there are some people that do, and it takes very little increase in China to pull money out of our markets. So that's the good thing. But it looks like whenever there's stability in the Middle East, our markets are doing better, and that's what's happened. And so enjoy the rally.
The rally, that's the word coming in. But wanted your take regarding Hyundai IPO as well, and how it will change the portfolio construct of a lot of people when it comes to the auto sector. And what's your recommendation? Subscribe or avoid come tomorrow?
You're talking to me?
Yes, Pashupati, the question is to you on Hyundai.
Yeah, no. So like all good jumbo IPOs, it'll be good fun for a while. I think that this is a huge issue. But we said the same thing when LIC came, and that got swallowed. I think this will also get swallowed. It's a good IPO for India, and I think that it will probably take money away from some of the other companies like Maruti and M&M and Aisha and all the other companies. But I think that at the end of it all, we do need more, and this is good quality paper, and it's a company that's doing well. So why not? And it'll be like Maruti, where Maruti gets half its earnings, more than half its earnings from Maruti India. Hyundai could actually end up being the same place with them. And with 80, they're giving, I think, 17.5%, right? So they're basically going to be left with 82.5% will belong to them. So they'll still have fat dividends coming. So that's good for all concerned.
Okay, point taken. So that's the view on, of course, the IPO. But we did speak with a couple of other experts as well as to what their take is. Samir Arora believes it's not going to be a big blockbuster of sorts. Fairly neutral or at par listing is what he expects.
There is no bullishness in this story. It is just a story created by the Indian public. For what reason, I don't know. Because there are 8 or 10 global listed auto companies, and you can see what has happened to them in the last 3 months, 6 months. Every one of them has warned. One of our bigger companies in India is basically 50-60% exposed to the same market. How can it be that 9 out of 9 companies warn? Our company doesn't warn, but says that we will close down the plant because there is too much inventory, but in the long run we are bullish. If nine of those guys in their market are not bullish, why we are bullish about one our company, I don't know. Overall, I think that auto is one of the worst sectors to invest in. And I think that the IPO, this new IPO will most probably on listing will be plus minus par.
Trend is that you will end up usually getting better returns as an investor in IPOs very early in the cycle of IPOs coming back into the market, coming back into fashion. As that cycle matures, the returns tend to get lower and lower. Don't expect that there will be such a serious sell-off because number one, if one were to look at the liquidity position, I think the mutual funds and different investors have maybe 1.5 lakh of uninvested capital. So any sell-off is likely to be therefore shallow. But you will also have this situation where you have to assume that the growth that is necessary for you to pay for these valuations, a lot of that is already built into the price. So
Well, and ahead of this mega IPO, we also caught up with Unsu Kim, the MD at Hyundai Motor India, and Tarun Garg, the COO. Let's hear out a slice of that interaction.
If you see, this probably is the right time because if you see, especially post-COVID, the whole world is recognizing the importance of India, the growth of India. The GDP, if you see, consistently at 6.5–7% is much higher than the global peers. And also in terms of Hyundai, if you see, now we are expanding with the Pune plant, you know, the capacity addition of 250,000. So we believe this is just the right time, you know, for the next phase of Hyundai's growth in India. And probably like we said, probably IPO is really a very good stepping stone to that next phase.
And do you feel the transition to electric vehicles is now happening at a faster pace, given that nations globally have made a commitment to becoming net zero on their climate principles? In terms of your electric vehicles, what are your plans and what are the launches you're planning?
In terms of EV, India is the early stage of electrification. We are seeing that India EV is expected to grow strongly by 2030, led by the government's strong initiatives and many OEMs EV focuses. The HMI has strong access to the HMC's EV and battery technology, so we are developing an EV ecosystem in India. We are planning to launch 4 EV models.
Okay, so that's the latest coming in from the Hyundai management. But in the meantime, a couple of these housing finance companies are doing well. In the last 2 minutes, there's a perk up on PNB Housing. Aptus Housing has been doing quite well. And the other one that we were tracking earlier in the day was Aadhar Housing. I think maybe it's cooled off a bit. But nonetheless, some of these stocks holding on to the green, and the entire real estate pack at that. Raymond, for instance, even Oberoi Realty, you have a couple of other names like Macrotech Developers doing quite well in the trading session. Kunal, what's the view on housing finance companies or real estate? Any top bets?
So yeah, I think both the stocks which you mentioned, PNB Housing as well as Aptus, both of these charts are looking very, very attractive on their respective timescales. For example, PNB Housing in the last 2 months has gone through a correction from I think 1100 mark, 1120 approximately. The stock had come down to 940, 960 levels. It's coincided with the support at the 50-day moving average for PNB Housing, and the stock seems to have formed a bottom over the last 3-4 days, taking its own time to try and consolidate just at this 50-day moving average. So making a comeback again, today's break of the 1000 mark indicates that we could be looking at a resumption of the rally and an end of a correction for the stock. So would look out for targets in the range of 1100 plus at least over the next 3 to 4 weeks for PNB Housing. Aptus, the time frames on the monthly charts are very, very interesting. The stock has confirmed an inverted head and shoulder breakout, and this comes after weeks and months of the stock correcting, consolidating. So the last move, the last 1 week or so, the stock has rallied from 360, 365 to almost 395, 400, which it tested today. With this completion of this inverted head and shoulder pattern, I would probably believe that the longer term prospects now start to look very attractive for Aptus. So again, another chart which is looking attractive, but more from a medium to long term time scale.
Right. Okay, Pashupati, great to have you on the show. We'll let you go on that note. Let's get in some closing strategies as well. Naresh, you go first.
So that would be a buy on PNB Housing Finance. The stock, after making a breakout move about 850 to 1200, corrected well towards 950 and is making a comeback today. So expecting it to again go towards the 1100 mark.
Right. Kunal, what about your closing ideas?
So I'll go with the Ban Federal Bank. That's a chart which is looking attractive. The stock bouncing off from 188, 89 mark towards 194 plus levels where it's trading right now. Looks attractive for a double bottom target of 208.
Okay, let's take a very quick break. Then on that note, when we come back, the last half an hour of trade this afternoon.
Welcome back. Well, the market is holding on pretty okay. It's Wipro which is up 4% right now on account of that bonus excitement. October 17th is when the company will announce its earnings, plus might consider bonus issues. So the street is excited around that. Tech Mahindra is the other one. HDFC Life comes out with its earnings tomorrow. So ahead of that, that stock is excited. Talking about earnings, of course, it's HCL Tech as well as Reliance Industries, which is going to be in focus today. We'll get Somit shortly to talk to us about Reliance Industries. But before that, let me put the spotlight on HCL Tech, because the expectation is that this time it's going to be a growth quarter. 0.8% in constant currency is what we're expecting right now. Dollar and rupee revenue is expected to jump up 1.6 to 1.7% with a margin expansion of 90 to 100 basis point. Remember, this quarter there'll be that divestment impact of State Street, and hence the top line growth might be limited, but the seasonal uptake, operational efficiencies, etc. will aid the margin profile. Guidance is expected to be maintained, and deal wins we are expecting between $2 to $2.5 billion. But Mayuresh, if TCS numbers is anything to go by, it does feel like that the stocks have run up ahead of the fundamentals. Okay, we'll try and reconnect with Mayuresh, but in the meantime, let me take it across to Naresh and get a sense. Naresh, some of these IT companies are up 10, 12, 15% in the matter of last, 2 months itself. Earnings haven't been that supportive. Do you see a case of some of these gains to get undone in the coming weeks and months?
So it looks like, say, the way the markets have re-rated the whole IT band, the risk reward is not great. So out here at current levels, but the trend is pretty strong. So one is better off being in the stronger names, which is HCL Tech, LTI, Mindtree, Tech Mahindra. These are the names they have shown. But you don't want to be buying into the results. Rather, if there is a big gap down on the result, that's the price point you want to be buying it. So overall, the trend is positive. Would look at it after the numbers and not getting into the numbers.
Technologies, but what about Reliance Industries? Where's that ahead of its numbers and flat as flat can be once again after a little bit of an attempt, or I think 2 attempts at climbing back above. But Somit is here from our research desk to tell us what to pencil in for Reliance's numbers.
Well, on an overall basis, if you look at Reliance Industries numbers, it is expected to be muted or flat as what the expectation is. If you look at the revenues, they are expected to grow by nearly 1%. EBITDA is expected to be higher by 2.3%. Margins are expected to come in at 16.9%, while the net profit number, that could be higher by around 4% on a sequential basis at close to 15,760 crore rupees. Now, if you look at the segment-wise performance, it is the weakness that we'll be seeing in the O2C business and the oil and gas exploration business, which will weigh on the overall numbers for Reliance Industries. However, on the positive side, the Geo business or the telecom business is expected to report a strong set of numbers. Now, if you look at the O2C EBITDA, that is expected to be down around 5% purely on the back of the fact that the Singapore gross refining margins were largely flat on a sequential basis, while the petrochemical margins also did not improve meaningfully in the second quarter. Now, when it comes to the oil and gas exploration EBITDA, that is expected to be down around 1% on a sequential basis because of a slightly lower production and because of increasing profit share of the government of India. Now, when it comes to the retail segment, that could see an uptick of nearly 10% on the revenue basis, but the EBITDA of retail is expected to grow around 4%, which means that there could be some margin dilution when it comes to the retail segment also. However, whatever growth that we'll be seeing on the retail business will be purely on the back of store addition, new brand addition, and because of the rising footfalls that Reliance Retail has been seeing.
Okay, so that's about the oil and gas business as well as the retail business. But what about Jio, Somit?
Well, Reliance Jio, which is the telecom arm of Reliance Industries, is expected to report a strong set of numbers. In fact, that will be the only segment that will report a strong set of numbers for Reliance Industries. Now, if you look at the revenue front, that is expected to be up 7% on a sequential basis. EBITDA is expected to grow 8%. Margins are expected to come in at 53.2%, while the net profit number, that is expected to be higher by nearly 14% on a sequential basis. Now, whatever growth we will see in the telecom business will be purely on the back of the tariff hike that the company had taken. And if you look at the ARPU number, which is the key number for a telecom company, that is expected to be higher by 6%. However, because of this tariff hike that the company had taken, the subscriber base is expected to we are expected to see a degrowth when it comes to subscriber base, and that is expected to come in at close to 48.84 crore as against 49 crore that we had seen in the previous quarter. Now, the ARPU growth for Reliance Industries is expected to be highest in the last 10 quarters, but on the flip side, the subscriber decline is expected to be the highest in the last 10 quarters as well. Now, as I was mentioning, it was because of the tariff hike that there could be some subscriber churn, and hence we will see a decline in the subscriber base. However, also do remember that the ARPU growth that we are seeing will continue for the next couple of quarters also for Reliance Industries, given the fact that most of its subscribers are on long validity plans. Hence, the entire benefit of the tariff hike that the company had taken will be spread over the over total 3 quarters. Now, apart from this, what to watch out for from Reliance Industries earning? Firstly, what is the management commentary coming in when it comes to the refining and the petrochemical business? How has been the consumer behavior when it comes to tariff hike, and how are they responding to that? What is the growth plans for the company? What is the capital expenditure outlay, and how are they looking? How are they seeing the growth when it comes to the broadband business? Would be important to track from Reliance Industries earnings.
Okay, thanks Amit for that. But we do have Mayuresh joining us on the show right now. So Mayuresh, what's the expectations from Reliance Industries? And more than earnings, what are the next set of triggers really to watch out for this one? Because it's been fairly sideways from that 3,200 all-time high level. It's down to 2,700. What will provide a fillip to Reliance from here on? You believe that, you know, the tie-ups that Street has been talking about?
Afternoon, Anisha. So I think I would largely concur with Somit to a large extent on the dynamics that he's put forth for various segments that Reliance operates out of. But triggers going forward, I think 2 things. One, I think if there is a genuine recovery that probably happens in terms of China per se in the next few quarters, the downstream business, which definitely defines how the petchem business will move for Reliance, and the spreads thereof, should show signs of stability and improvement, and that can have a telling say in terms of the petchem performance itself. As far as the upstream business is concerned, and as far as the margins are concerned, my own sense is that it's largely a variable again in terms of the entire demand-supply dynamics. But because Reliance has so many options in terms of feedstock at its behest, it should be relatively better compared to a lot of global peers, at least at this juncture. The retail-facing businesses, Jio is expected to show a stellar show this time around because of the ARPU increases that you've seen. That will very well continue in the next few quarters as well, creating a huge amount of operating leverage on the balance sheets as the subscriber base stabilizes. But the retail business should also catch up steam. A lot of stores which have opened up or have been opened in the last few quarters should see reasonable amount of footfalls, reasonable amount of fixed cost absorption coming back. And therefore, the second half, retail-oriented businesses should see a strong comeback. Obviously, the new age businesses, Anisha, is something that to be seen as well. They are having a very, very calibrated approach in terms of their new age businesses as well. The capex has been calibrated as well. So what kind of timelines are we looking at for these new age businesses without minimal burden on the balance sheet is also going to be critical. So I think these 2 segments might actually offset the weakness in upstream and the O2C business.
Right. Of course, Oberoi Realty is the one which is holding up very well today. At the board meet day after, they're going to be looking at a fundraising plan as well. They recently, remember, approved the proposal enabling resolution, that is, for raising about almost 6,000 crore rupees in terms of funds. Mayuresh, what is it that you're making of the realty pack? I mean, even last week in the recovery and the rebound that the market saw from the previous lows, it was realty actually which led the charge. Any of the realty names that you think one could have bought at the declines or can still buy now?
So afternoon, Aisha, I think the real estate cycle is still well and truly on, right? We are probably in the 4th year of the real estate cycle. The expectations in terms of developers actually doing well, specifically when it comes to the mid-premium segment. You are still hearing reports that the high-end segment might see some stickiness. You've actually seen some element of inventory built up. So the developers who are catering to the mid-level segment, the mid-premium segment, might actually continue doing well, in my opinion. Again, I think there is competition which has probably added pressures, specifically in metro and tier 1, tier 2 cities, as far as a lot of redevelopment projects are concerned. But I think a lot of these players have already embarked upon an asset-light model. They're doing a lot of JDAs with a lot of private players within respective cities as well. And that probably restricts a large amount of leverage that they carry onto their balance sheet. Realization growth in terms of all the new launches that we are probably looking at and the new launches that have happened in the past few quarters have remained extremely stable. In an environment where interest rate cuts will also happen from RBI at some point of time at the end of this year and the next year as well, we're probably going to see more action probably come through on this space. So yeah, I think Oberoi, Godrej, DLF, if somebody's holding, can continue holding on. But my own sense is that real estate ancillaries, Aisha, can be a tad bit better play compared to the developers. They've gone through a cyclicality of pain as far as input cost inflation is concerned. But as all these new homes are getting developed, I think all these real estate ancillary stocks might come back in focus. Greenply, Century, a few examples that, in my opinion, can be.
Do you also believe that other than main play realty, it's a Greenply, Century, the ancillaries which work better right now?
Yeah, they've done very well for themselves. So I'm not sure whether the pickup of price action could be substantial high for these stocks, because right now it looks like the risk reward is more in favorable with the traditional real estate stocks, because there was a point where over the last 3-4 months many of these real estate stocks had gone through their phase of fair share of correction. DLF had come back to that I think 800-day short mark, closer to its long-term averages. You've seen Macrotech Developers, you've seen Oberoi Realty, Godrej Properties, etc. These stocks have gone through at least 3-4 weeks, or within a span of 2-3 months, multi-week of correction for themselves. So I think now the risk reward, the price trend is coming back in favor into these traditional real estate stocks. My belief is that from current levels, I think one should probably try to look out for buying these real estate names. So I think DLF, for example, at 840-50 levels where it's trading right now, I think should be good for at least another 70 to 80 points on the upside. So maybe closer to 920, 930 could be an immediate target for DLF. You could be looking out for Oberoi Realty, the stock which has crossed I think 1985, 1990 mark today. I think that could be good for another 100 points on the upside, at least for the near term. So which means we are looking out for momentum coming back. We are looking out for risk reward being more in favorable for these names. So I would go with the traditional real estate stocks.
Okay, traditional real estate is better placed. That's the word coming in. But Mayuresh, what's your sense on chemicals? Last couple of quarters, we have been talking about how it's perhaps the bottom which has been made for them. Things are expected to look well, but that just keeps getting kicked down the road quarter on quarter. What's the expectation now? Would you bet on any of the chemical names?
So selectively, Anisha, I think a few of the agrochemicals and a few of the specialty chemicals look decently placed. So what we saw in the previous few quarters of destocking taking place, China still dumping a lot of the bulk commodities or bulk chemicals into the open market. I think that probably is still continuing at this juncture. But at some point of time, I think specific agrochemicals and specific specialty chemicals, the restocking exercise will begin. You've seen green shoots as far as demand is concerned from end user industries in the Eurozone, in North America, and parts of the Middle East as well. And obviously, they have to contend with the container issues that is still going on as far as the Middle East crisis and the Red Sea crisis is concerned. But to a certain extent, the under ownership is now fairly covered for a lot of these players within these spaces. Second half, the earnings recovery should be relatively stable. And my own sense is that as things improve in the next financial year, you will see a definite amount of earnings growth that comes through for a few of these players. So I think within agrochemicals, again, I think you've probably got players like PI, which can do well. Neogen, you've probably got Anupam Rasayan, you've probably got AB Organics. They are doing some niche activities as far as their specialty chemical is concerned, and a fair bit of an agrochemical presence as well.
Suresh, anything that you're spotting as a trend between the chemical and fertilizer space? Chambal, of course, is holding out well today. Aarti, PI Industries, Atul Limited, all in the green. That's not quite the case with the Coromandel, UPL, or for that matter, even Tata Chemicals, though. Naresh?
Okay. Yeah. In terms of chemicals, we have very different trends across the board. So you have some names totally sideways. So the lot of large names like Deepak Nitrite, SRF, etc. have gone sideways. At the same time, something like a Deepak Fertilizers is consolidating around the highs it made in 2022. So that looks very promising around that 1,100 mark where it is consolidating. So that's one name. Atul has been trying to make a basing out formation wherein the stock did rally from 5,500 or to 8,000. And now for the last one and a half, 2 months, it has been in the range of 7,500 to 8,200. That could maybe break out after the numbers. So for now, waiting out for some of the names, but there are different divergent moves in the whole sector as such.
Divergent moves within the sector. Mayuresh, what's the view on Hyundai IPO subscriber avoid?
Yeah, so I think a large part of the money is going to the parent. They're going to make a killing out of this, Anisha. So it is an OFS. Let's remember that. Nothing is coming back to the company. But I think the numbers so far have held up pretty well. So I think the product launches, the volumes, the top line growth, the margins have been reasonable enough. And to a certain extent, I think if an investor has a medium-term view, he can subscribe to the IPO. But I've also got an equally important point to mention that Maruti in the same breath, right? The mid-segment cars that they operate out of, the expectation largely is that they should recover their market share over the next few quarters. They are expected to do a lot of launches as far as the high-end segment is also concerned. And let's not forget the kind of distribution, the sales network, the Nexa showroom for premium cars that Maruti probably has. And there is not much of a valuation gap between Maruti and Hyundai. Maruti gets a sort of a premium valuation for all these factors. So Maruti also should remain on your watch list.
Okay, a watch list for Maruti as well as Hyundai, of course, the big IPO upcoming. But let's also get you some BTST strategies on that note. Kunal, what's on your list?
So I'll go with the bond TVS Motors. That's a chart which on the very short term basis, the hourly time frame chart is forming a bullish flag pattern. The stock breaking out of 2820, 2825 resistance. So would look out for targets in the range of 2925. Stop loss could be kept at 2750. And Piramal Enterprise is something which is making a very strong comeback. The stock, after almost 1 month of choppiness, a 7-8% correction from 1130-40 mark towards 1060-70 levels, I think is making a very strong comeback, bouncing off from its 50-day moving average. So would suggest the bond Piramal Enterprise, targets of 1150, stop loss to be kept at 1050.
Okay, and Naresh, what's your BTST trade?
So first is the buy on PNB Housing Finance, a decent correction done and a recovery in place. Stop loss at 990, target price of 1040. Second is the buy on L&T, which has bounced back from that important support band of 3450 to 3500. Expecting some follow-up move towards 3600 plus, stop loss at 3500.
Okay, point taken. But Mayuresh, any fresh stock recommendations that you want to leave us with?
So a couple of names. I think we are keeping a stock like Dealing on our radar as well, Anisha. I think the kind of commentary that is probably coming through in terms of new products that they are developing, the expectation largely in terms of data consumption trends should continue in the Indian context. We've obviously seen a huge amount of spurt when it probably comes to both broadless connections and wireless connections as well. And new product launches is something that can probably hold this company in good stead. Again, from a balance sheet perspective, very, very strong balance sheet. And our own expectation is that with new products and more service offerings expected, the earnings growth should probably stay on track for Dealing in general. One stock, again, I think, which I have probably discussed in the past as well, Praj Industries, I think, has retraced some bit from upper levels as well. But the kind of innovations that Praj is also making, specifically when it comes to not just the 2G or 3G ethanol equipment side, the diesel blending side as an example, the blending in terms of ATF as an example. And therefore, I think as these markets open up, Praj already has the technology in place to probably capitalize on all these opportunities, which are pretty humongous over the next few years. Their engineering presence also when it comes to water treatment and high purity solutions is something that can augur well over the next few quarters with more orders expected their way with reasonable margins. A fair bit of an estimate can be put forth in terms of reasonable amount of earnings growth that can probably come through. So Praj at this level for declines can also look like a good opportunity.
The take coming in right now on where is it that we're seeing value in the market. Let's revisit some of the buzzers in trade as we speak right now. You've got the Nifty holding up to that 170 odd point gain, Wipro, Tech amongst the benchmark, or rather the large caps. It's HDFC Bank all the way, almost touching that 1700 price point, 2.5% of an uptick coming in. L&T holding higher by about 2% as we speak, and then ITC as well, which is looking strong by about 2% right now in trade. But let's get in some macro data points as well. And according to experts and economists, the CPI inflation is set to rise to 5% in the month of September after remaining below the 4% mark for the last 2 months. In fact, Gaurav is here from our research desk with more on what the Economist poll is throwing up.
Well, yes, when we talk about wholesale price index, the data has already come out, and when we look at the inflation for the month of September, we have already seen an uptick. It is at 1.8% versus what it was at 1.3%, and this was largely led by food inflation. Now, when it comes to consumer price index, they are not expecting anything different than this. When we talk about RBI governor also, he has also said that in the month of September, we may see an uptick in inflation, and that will be led by food inflation. And when we talk about experts also, they are expecting the same thing. They are expecting inflation to inch up more to about 5% levels versus what it was at below 4% level. And there are two things which are actually impacting. The first is the base effect. What they are expecting is that the base effect will play adversely for inflation, and the second is food inflation. Now every expert is now expecting food inflation to remain inflated and at an elevated level, and that can actually weigh in on the inflation number for the month of September. There are other aspects which are playing out. Now experts also believe that the core inflation can also increase, and the reason for that is that when we talk about rural recovery, that is actually rural economy is actually recovering. That is one reason. Second is that when we talk about the gold prices, they are also going up, and that can actually impact the core inflation. And lastly, when we talk about the geopolitical tension which is rising, can actually put some pressure on crude oil, and that plays at another risk for inflation. Other than that, when we talk about some of the other data, when we look at IIP data, we have already seen a contraction where we saw base effect playing out, and that is the reason why base effect can impact the inflation as well in this quarter. Lastly, RBI has kept the inflation rates unchanged at 4.5% during its MPC meet, so it does not seem that RBI is expecting any kind of major uptick, but it will be definitely worth watching out for is that how September data comes out and how it pans out in terms of and in comparison to RBI's expectation.
Okay, Gaurav, we'll watch out for those details. So let's see. Our WPI was a bit cooler than expected at 1.85% thereabouts versus expectation of 2%. Let's see which way CPI really heads. But it's Federal Bank which is firing up 5.5% higher. Mayuresh, any mid-cap, small-cap banking names that you're watching out for?
So Karur is something that we like, Anisha. I think our take is that the advances and deposit growth has been reasonable enough. Yes, the banking industry is grappling with deposit growth. But I think the performance so far as Karur's overall dynamics are concerned, seem to be pretty well placed. Secondly, I think in terms of their asset quality pressures as well, they have come off quite significantly. And our own expectations is that they should still be coming off in the next few quarters, which gives the inherent strength as far as the bank's balance sheet is concerned. PCR is pretty strong, well provided for. Capital adequacy remains reasonably well equipped enough. And therefore, I think there should be a reasonable amount of credit deposit growth. Cost to income ratios should trend lower over the next couple of years. And return ratios, specifically ROEs that we are probably looking at and tracking at Markets for India, should probably improve. On our parameters at Markets with EPS, RS rating, institutional holding as per the cancelling norms, look perfectly placed. So Karur is one stock that we are probably.
Okay, point taken. That's the view coming in as far as banking names are concerned, and Karur Vysya Bank, which is in focus on account of that. But at least there's some sort of positive news coming in for Mumbaikars, and that's the fact that 5 tolls, while entering into Mumbai, which were chargeable earlier, are going to be free from here on. Let me take it across to Anurag Shah to get more details on this one.
Major relief given by Maharashtra government to commuters travelling from MMR region to Mumbai and Mumbai suburban districts. 5 entry points of Mumbai has been exempted from toll for light motor vehicles, which will include the car, jeep, van, mini truck. So presently there is a 45 rupees toll for entry into Mumbai from 5 entry points that include Dahisar, Airoli, Vashi, Mulund LBS and Anand Nagar checkpoints. So from tonight, there will be no toll of 45 rupees for these 5 entry points. So this was a long-standing demand from various outfits, including some political parties also, and public at large is also welcoming this move of exempting toll from 5 entry points. So it will have an impact on traffic congestion, it will have an impact on real estate, and commuters will also save around 1500 to 2000 rupees. Those who are traveling every day from MMR to Mumbai, so they will not have to pay the daily 90 rupees toll every day. It's a big relief given by Maharashtra government just before the announcement of election dates.
Oh yeah, big relief for all those coming into Mumbai from those places.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.